Please go ahead, sir.
Okay, so good evening, everyone. On behalf of ASSOCHAM, I have great pleasure in welcoming Sri S.K. Jindal, Chairman of National Council on Commodity Markets, ASSOCHAM. I also welcome all the experts and our senior members of ASSOCHAM, Sri Rajiv Talwar, he will be just joining. Mr. Narendra Madhwa, Managing Director, SKI Capital, Professor Saurabh Agarwal, Indian Institute of Finance, Mr. Shivanshu Mehta from MCX, Mr. Vikram Dhawan, Nippon India, Mr. Gaurav Mathur, Safe Gold, Mr. Samir Patil from BSC, Mr. Naveen Mathur from Anand Rathi, and Mr. Soma Sundaram from World Gold Council. Great welcome to you, sir, all of you. And I also welcome all the participants here, those who are attending the webinar. And most of them, they are aware that regularly we are organizing knowledge-based discussions on these topics. And today it is on post-COVID investment opportunities in various asset classes, rebalancing portfolios. Sir, we have heard from many of the experts in the past that how to balance the portfolios, and now the turn is how to rebalance it after this pandemic. And we have a strong panel of our experts, and they will deal every aspect of this important subject. I now request Sri. I would also request all the participants to please write their question to us so that it can be addressed well in advance with by all the speakers, whoever is concerned with your question, to kindly conduct the proceedings. Thank you, sir. Thank you, everyone.
Thank you, Razoraji. Thank you for a warm welcome to all the participants from ASSOCHAM and on my own behalf also. Good evening to all of you. As we all know, COVID-19, the mother of all disruptions. Serious pandemic, but we have been able to deal with it until now reasonably well. But it is still not over. So many big changes has taken place during this, which none of us imagined what kind of changes they will be and what will be the ultimate outcome of it. But now we have reasonable idea how we are going to spend the rest of our life. And rest of our life, what I mean to say is that it could be that always we'll be having mask with us, gloves with us, and sanitizer with us. Rest of our life, it may be possible that we'll have to deal with it always. Friends, so many changes and big changes, and same applies to our investment also, which is an important aspect of our life. Investment plays very important role in everybody's life, and it needs to be dealt with very, very carefully. So that is why this conference today, we have a panel of distinguished expert speakers to deliberate on different aspects of the subject today. Our focus of discussion today mainly will be on investment in gold, real estate, mutual fund, equity, commodity, and other financial instruments, and how to rebalance investment portfolios along all these. I was thinking which one to go for first. Again, gold came to my mind first. So let's start with gold. Gold, as you know, it always comes very handy in such difficult times, and this time again it proved its history that in the last 6,000 years also and today also, gold is the most important thing which brings back our confidence, which help us to maintain our sanity. And this is the commodity which anybody of any age would like to have a piece of it in his possession. I would like to start with Mr. Soma Sundaram. Mr. Soma Sundaram, as you know, most of you, he is Managing Director of World Gold Council of India, has 27 years of experience across diverse industries, including FMCG and banking sectors mainly. And just now, before starting, I was asking him why he chose World Gold Council, why he chose gold business as his profession. So I would like to know that also. for all of our investors? And how much gold, what can we do with this gold which we are holding, and how it is better than other asset classes? I would like to have your perception for our investors, and I would request you, if possible, to give them something as a takeaway from this conference today, so that they go happily and more enriched with knowledge on gold from today. Mr. Somasundram, please.
Thank you very much, sir. Can you hear me?
Yes, yes.
Okay, great. Now, actually, my task has been made very easy because just a couple of weeks ago, we from the World Gold Council released a very specific, very short report called The Relevance of Gold as a Strategic Asset for India. It's available on our website. I'm very happy to send it to ASSOCHAM to forward it to people. It's very easily readable. It explains why gold should be part of a portfolio. Now, I will just make 2-3 points and then probably hand it back to you. One is institutional investors across the globe. If you really were to look at since last 30 years, they have actually increased the share of non-traditional assets, which is equities and bonds. They have moved on to non-traditional assets. That has increased from 7% in 1998 to 26% in 2018. Gold is very small part, but this will enter. I mean, we are working as a council to make sure that gold enters this portfolio in a big way. Now, closer home, if you really see, what we did was we analyzed what has been the return. In INR terms, this is a very important thing we need to know. In INR terms, till December, this figure is till December, so it would have gone up now if you take the current price. The price of gold has increased by an average of 14.1% per annum since 1973. Since the withdrawal of gold standard, the gold price in INR, in Indian rupee, has gone up by 14.1% year on year. So that tells us why gold is a very preferred asset class. We also did lots of analysis, and that report does deal with it. We have even said if a pension or fund in India, we have lots of pension funds, etc. If they invest anywhere between 6% and 17% in gold, had they invested in 6% or 17, between 6 and 17% in gold, the return would have been, risk-adjusted return would have been higher. It would have been, when I say it would have been higher, it's not a negligible, increase. It would have been, it would have been of significance. Okay. So the clear thing is, obviously, gold has to form part of our portfolio. You got to hold it. Now, coming back to India, now you asked a very specific question, because in India, what happens is the first asset class, the moment you come out of the poverty line and go into the middle class, the first asset class you access is gold. So here the situation is a little different for the households. But when it comes to people who have gold, how do I use the gold now? The prices are going up. I don't want to do anything. I think there are other experts, like I would look at the exchanges to explain to people how they could, if they have a certain quantum of gold at home without selling it, how can they actually work on the price in the exchanges. I'm sure there are options and other stuff which MCX and BSC will probably explain. But otherwise, I'll just stop by saying, otherwise there are schemes like the gold monetization scheme. I think people should start learning it and probably start earning from gold to the extent gold is in surplus in their hand, but not exit gold. So I would leave it and then probably pick it up as we go along, sir. Thank you.
So I have a question attached to it. When you say 14.1% per annum since 1973 average return on gold, what would be the second best nearest? Could it be equity or something else?
Right. Yeah, yes, it is equities. It is equities.
Equity.
Yes.
And gold people prefer because it is ease of investing also in gold.
See, when you talk of 1973, sir, this is just an analysis of the return, okay? But when you are saying why do people access gold or buy gold in India, it is essentially because it is the most easily accessible. We have 400,000 jewelers who are spread across the nook and corner of this country. They are therefore able to, provide this access very, very easily. Clearly, easy access to gold is one reason. Also, if you see between 73 and the time when we opened up, I think the stock market investing was very, very exclusive work. It was not as broad based. Even today we have a lot of ground to cover, but it wasn't even as broad based as it is now. Therefore, gold and real estate tended to be the assets of preference in those days.
Gold and equity both performed very well over a long average, but at the same time they have inverse relationship. Gold works better when there is a trouble, there is turbulence, and equity works better when there is stability. The nature is totally different.
Yes, sir. It is. I mean, I would. You are absolutely. You made some valid points. I would not say that equities, work only when there is stability. In fact, if you ask a real investor, I'm sure there are some on the panel. They will say it is only when there is turbulence you should choose the right one. That's when you make your maximum money. So every asset class has its positives and negatives, but all that we as the World Gold Council say is, look, gold is like an insurance. It must form part of portfolios to make the portfolio more robust, less volatile. But we wouldn't obviously say that it is better than this or that. It has a great role as part of a portfolio. So
And
that is why I would not say that why gold shouldn't invest in equities, that kind of stuff. It is not gold versus equity. It is gold and equities and bonds and other assets.
Absolutely, absolutely. We agree with you. All of them required for diversification and for making a stable portfolio. But can you throw some light on gold ETF?
As I said, I'm keeping it specific to India. Globally, as you know, ETF inflows are seeing the highest inflows as we speak. They have touched lifetime highs. Europe and US actually, they have crossed even 3,000, and the inflows are even higher than what central banks have bought in the last 2 years. Actually, that's very this year, the 6 months inflows into ETF in the US have been even higher than what central banks have bought in the last 2 years, and central banks have bought the maximum in the last 2 years ever since the withdrawal of gold standard. So you can imagine how much is flowing into ETF. Coming back to India, of course, we had 14. Right now, I think it is about 11 ETFs. We have about 20 tons. That's the size of our ETF. It was at one stage 38 tons or 40 tons, but it had shrunk between particularly 2012 and 2016. It started shrinking. It has a very long, space to grow. Clearly, ETFs has to grow because that provides a lot of liquidity, and as SEBI even allows funds to invest in, to broad base their portfolio to invest in gold as an alternative asset class, it is only ETF. And unless there is liquidity in this market, that's not going to grow. Nobody is going to, no mutual fund is going to invest in, hard gold. They will want ETF. So for us, we need to look at what is to be done to improve the ETF market.
All right, thank you very much. So you see big potential in ETF, and you would like to see Indian investor going towards ETF. They should consider it more.
Absolutely.
Very good. Thank you. Thank you very much for so much of information about gold, and this is the latest one. But I would like to know, if you have 100 rupees investable with you? Where will you put this 100 rupees? In what all areas? Gold and mutual fund and equity and what else? And what percentage?
Are you asking me, sir?
Yes, sir. Because we want to follow you.
First of all, I would never give an advice because we are not financial advisors. We just speak about the positive attributes of gold, and we will only go to the extent of saying, depending on your risk appetite, whoever it is, a portfolio with gold is stronger than a portfolio without gold. I think we will not cross anything beyond this to suggest how people should use their money. So I'm sorry, I can't really give you the, and I'm not an ideal investor. Let me also make it very clear in this. I am not an ideal investor. I make my mistakes.
That everybody does, Mr. Som, but we really appreciate what you say, and we respect your saying that you would not like to go beyond this. Perfect. Thank you. Now, I would like to know from my friend, Mr. Shivanshu Mehta, who's head of Bullion MCX exchange, has been with the exchange over 16 years. He designed their products and he has great experience in commodities, especially gold and silver, where he is interacting with the whole Indian market day in and day out. Shivanshu ji, what is your take on this gold investment for our investors? And I would like you also to give them some takeaway, a real advice, how they should handle their money, because their money is hard-earned money. And I would like them to get something to how they can create an alpha by your advice. Cannot hear you.
Must be muted.
Your advice is confidential?
No, not quite. So firstly, thank you, Jindal Saab, for a rather elaborate introduction, not even required. I think, firstly, I must congratulate ASSOCHAM for bringing constantly, these topics of current contextualized relevance. It really serves very well. I think while Som has really said a lot, and in the epilogue, you have already set the context, I will add these following points. Like they say, cometh the hour and then cometh the man. So gold in this period of turmoil, geopolitical, pandemic related, in an environment which is almost negative interest rate, monetary easing across the world, these are idyllic conditions for an asset like gold to yet again prove its mettle. I think it has. Before the lockdown, the prices which we used to see 39,000 odd, and this journey of close to 50,000 as a leading bullion exchange, it reflects firstly in our turnover, in our participation. Last year, like I mentioned, we were 102% up in turnover in gold, and we continue to be about 24-25% higher in the bullion turnover in these 3 months. Why is that so? Partly because the theme of today's session is that how retail investors can find organized ways to invest in gold, digital ways to invest in gold, accumulate gold on the screen, do weighted average pricing, lock in different prices through liquid contracts which exist on the exchange. So we have seen all these things unravel. It reflects in the numbers. You see, the portfolio aspect which you are referring to is actually an empirical reality. It's an empirical truth that they say that a portfolio which has commodity derivatives, managed futures, to an extent of 20% of the total, like Som said, and you rightly pointed out alpha. So it actually gives a better return than singularly oriented portfolios, I'll put it this way, and it reduces the beta, it reduces the volatility. So, these two things together. And what did you see in the lockdown? Why was it that there was the COMEX prices running away, and there was an unavailability due to physical constraints of the gold, and the LBMA represents the physical market. Yet there was a tremendous appetite and people rushed to the futures, and thereby creating that disparity. And for a long time, ETFs remained at a premium just after lockdown. Of course, Vikram is there; he'll throw more light on it. But the home experience which I can share with you is that we have launched retail products for this very purpose. One is the silver 1 kg bar, and it is no strange coincidence that during this period it has seen 10.5 tons of 1 kg of silver bars being delivered on MCX platforms. Again, retail appetite. During the month of March, as we are all aware, silver was at a premium never seen before. Why? Because of retail interest. The 1 gram gold contract which we have launched, nowhere in the world does it exist, deliverable 1 gram gold petal. 14,100 plus coins have been delivered. So these are all indicators of retail interest and the changing style of retail investment. Like you said, we'll be working with masks and sanitizers and maybe gloves. You said some time back. Yes, it is very much possible. So the differentiator between bullion and jewelry, between asset and a wearable, ornament, will further become evident upon all of us. I feel, today we have Gaurav here from Safe Gold. He'll tell you, digital gold in India, top 3-4 companies, they are doing around 300 kgs a month, sir. Was it ever heard of before? Digital gold, and this is again enabled via exchanges. So some companies, they are taking deliveries from MCX and they are in a way helping digitize it, because then it is being distributed to their clients and they go and exchange it in the jeweler's shop as and when they want through the demat process of the exchange. So electronic holding, electronic accumulation, liquid order books of the exchange, different product portfolios, accumulating it, holding it electronically, this is probably going to be the way forward, and any product which is designed around that will probably see success. So that is the initial remarks I have to make, sir. Thank you.
But tell me one thing. Did exchange through its research department knew that there is going to be a pandemic coming?
No, sir. No, sir. You have those sixth sense qualities, sir. I don't think.
No. And did you know that if pandemic comes, there will be a 25% increase in gold prices? Did you imagine?
No, I did not. The suddenness of it.
May I answer? While Sivanshu
Sure,
or
sure,
Amin
sure,
or anybody, nobody can say that. But there was always a discussion that in times of crisis, and the crisis could be anything, we would not have defined the crisis, but we always speak about gold saying in times of extreme crisis, that's the one which will save you. And so that is known. So Sivanshu, I just helped you. Sorry, go ahead.
Sure, it's very important for friends to help when Jindal Saab is in the mood of giving googlies. So
no,
it's always
those
helpful.
6,000, that is the 6,000-year-old history gold has. Always during crisis, it has increased leaps and bounds, and it has helped. Demonetization, same thing happened. Now I would like to invite Mr. Gaurav Mathur, Managing Director, Safe Gold Digital Gold India Private Limited. By the name of Safe Gold, they are doing this thing. The company has digital gold brand by the name Safe Gold, and Mr. Gaurav himself has 30. Oh, they are working with so many banks and other firms, and he has 15 years experience in private equity, etc. Worked with Manapuram and Jubilant, all. So vast experience. Gaurav ji, please share your experience with us, and we would like to know your perception on digitalization of gold and how is the future of digital gold from here onwards.
Jindal Saab, thank you. Thank you for this opportunity. I think in terms of our experience, we're a relatively young company. We've been around for about 3 years. In that 3 years' time, we've seen a very positive reception for digital gold. And I should just clarify that digital gold is actually physical
Mr.
gold.
Gaurav, why we cannot see you? Mr. Gaurav, why we cannot see you?
Sorry, I'm checking. Am I visible? So, wait, let me put my camera on and on.
No?
And no, you are visible, very much visible, Gaurav. You can carry on. Yeah.
All right, carry on, please.
Okay, no problem. So I was just clarifying that many people mistake digital gold for something that is not a real product. They think it's a digital token of some sort. This is actual physical gold, which is stored in a vault, and it's just sold over digital channels. It's become very popular, especially in the last 1 year when you've had many more people buying it in substantial quantities. Because the main benefit for digital gold is it's accessible in convenient places. So we've partnered with some banks, we've partnered with many brokerage firms. We are on many of these mobile wallets like your phone pays and MobiQuicks and things like that. We're on online websites. Some, in fact, video games also distribute digital gold to their winners as opposed to distributing money. So many places we make it easily accessible in across many different platforms. And we think that in the last 2 years, almost 80 to 90 million consumers in India have bought digital gold in some way, shape, or form.
80 to 90 million consumers.
हाँ, मतलब अभी 8-9 करोड़. Now a lot of these लोगों ने 50 रुपए का भी खरीदा है, 100 रुपए का भी खरीदा है. So we made it divisible. So like shampoo went into sachets. So earlier shampoo was in bottles and they put it in 1 rupee sachets. We've made gold also that you can buy it in low ticket amounts. So everyone buys gold in India.
So power of fintech.
Power of fintech is a good way to describe it, Jindal Sahab. Perfect encapsulation. So that has made it accessible. Everyone used to buy gold in any case. It's not some new product. As you said, it's the 6,000-year-old product. The other thing is, in times of crisis, the returns also look good. One other data point I just throw in the mix, put out there for people to look at. We've gone and looked at international gold prices going back 100 years, 120 years. So in US dollar terms, if you take a 20-year, 50-year, 100-year kind of time frame, gold gives you about 5% a year in US dollar terms. Add to that, the Indian rupee historically has depreciated 3-4% against the US dollar. And of course, there'll be different periods. So if you now look at gold in 50-year, 100-year kind of time frames, it will give you maybe 9-10% in Indian rupee terms. And of course, as Som said, since the 70s, it looks much better. And the other cut we've done is, apart, if you take 5-year periods, 10-year periods, ever since Indian equities data started, apart from the period 2004 to 2019, gold has never underperformed equities in India over any 5 or 10-year period. It's only the last 5 years, effectively, between 2014 to 19, where gold was underperforming equities. So we think that has now got highlighted again in the recent past, and that's why many more people are coming to digital gold. And I would say we are a bridge to people trading on the exchange. So, for example, we get a lot of mass market customers. So during the lockdown, when we couldn't buy from refiners and we couldn't buy from banks, then we were buying it in a big way from the exchange, and thanks to MCX, that was still open. So it allowed us to function continuously. And even today, we sort of maintain some kind of a mix. We buy some physical, and as it comes close to delivery, then we also take delivery on the exchange. And we see ourselves as democratizing gold, because one of the questions you'd asked Som was, why do so many people buy gold? I think we just help that. You've always had more jewelers than bank branches. I think the last RBI statistics said 95,000 bank branches, and there's somewhere between 300,000-400,000 jewelers. So it's more, so gold is much more accessible in the physical world. We are just trying to now make that, take that accessibility and make it as accessible in the digital world as well, and take it across to consumers. And our aim is, right now, we started as a simple investment service in gold, but we want to build the full ecosystem. You should be able to deposit it with the bank under the GMS, so you can get interest on gold. And we've already got redemption networks with jewelers. So jo bhi aapka digital gold hai, you can go and exchange it for jewelry with a partner jeweler. You can use it as collateral for loans from a bank. So we're trying to add as much functionality as possible to physical gold in a digital format.
Gaurav, when did digital gold became operational in India first time?
First time it started in about 2016-17.
So about 3-4 years.
Ji.
And you see big potential here?
Yes, potential is there. Of course, rising prices help grow it substantially. So yes, we think that we should be able to grow at least 15 or 20 times from the current size.
These are the pros. These are the pros. What are the cons?
The biggest con, which many customers also tell us, is that you don't get the physical metal in your hand right away. When people buy gold, still the vast majority of people still like to feel physical metal in the hand. So I think that is the biggest challenge that.
But then it is not practically possible that you want to eat your cake and have it to.
but that is still the customer feedback we get. You asked me the cons, so this is the number one issue that we get. People say, "आप 0.1 gram का हमें क्यों नहीं दे सकते? आप 0.2 grams का बना दीजिए, छोटा coin बनाइए." That is the kind of, or rather, that is the most common complaint that we get. The
फिर
other
उनको माइक्रोस्कोप लाना पड़ेगा देखने के लिए उसे.
True.
All right, very good. Thank you. Samir ji, Mr. Samir Patil, Chief Business Officer, BSC Limited. 2003, when I first time met him, he was representing MCX and he was selling gold product, electronic gold product, online gold product at that time. And today he is looking after BSC business. But I remember him as a golden boy from MCX always. Whenever his name comes to my mind, it comes as MCX Gold Boy. Samirji, share your experiences with us. Now you have 17 years of online trading of gold experience and other experiences. How do you look at gold in today's scenario? I understand that during COVID, big changes have taken place, behavioral changes from investor point of view. Investors, they are not the same investor before as they were before COVID. They are different now. How they are different, and how do you see the potential of this business post-COVID?
Thank you, Jindalji. Thank you so much. Thanks for remembering me. In fact, those were those good days when we all, started MCX together with a full bang and full flow. In fact, I remember in 2008, I don't think anybody here recalls what we are talking of, when I had come to Delhi to meet you in person for that 150 tons of physical delivery in silver in one single contract. So those are those good old days. Well, in fact, a good question, Jindarji. Things have changed a lot, and there's a drastic change, behavioral pattern, change in behavioral pattern rather. In fact, if you see if you compare both pre and post COVID, in fact, in January, nobody thought that when everybody, in the month of Jan and Feb, all business heads and the CEOs sit together, scratch their heads and discuss targets in the month of April, May, June for the next quarter, and nobody thought that the next quarter you'll spend your entire day sitting at home and working from home. But now that's a reality now. And as you rightly said, I don't know about the designer shirts and trousers, but your gloves, your sanitizers, and your mask is going to be a part of your lifestyle at least for a couple of years to come. And to be very specific, gold is 100% imported in India. The prices of gold, Gaurav touched on a very, very good point, rather, when he was comparing the equities and the commodities, especially gold. And he said since 2014 to 2019, it was equities that was outperforming gold. The reason being was gold was, in fact, staggered in the particular range from, say, $1,300 to $1,400 per troy ounce. And it was only the rupee-dollar factor which was appreciating, and rupee from 63 to 75 today. It's an enormous increase in rupee, and that is affected the increase and return of gold price in India. And it is not gold single-handedly. It is, and Som rightly said, gold prices have increased in India in rupee terms, and that is thanks to the Indian rupee depreciating from 63 almost to 75 and a half. So this is a major reason why gold prices have gained that return in India. But touching on to the most important factors, what has been very interesting, what we have witnessed is in the last couple of months, from when the lockdown started, from March till now, what we have seen is a new breed of investors coming into the markets. Now these are the millennials. They are the investors. For them, they have no liking towards gold. They have no liking towards any we might talk about this 6,000-old tradition of investing in gold and all, but if they have a lakh rupees, if they have an option of investing in gold or an iPhone, most of them will prefer an iPhone rather, because the entire investing pattern has changed. Even and if you look at the number of accounts that have been opened for the large 10 members that we are talking today, which contribute to almost 60% of the volumes of the equity volume. There are other volumes that's also in India have increased. In fact, on BSE, my UCC unique client count is increased from 4.21 to 5.61 crores. So this is a huge number in this last 4 to 5 months. So this is encouraging. Now for us, there are various options.
Two businesses are working. One is during the COVID period. One is Reliance, and second is Exchange. Reliance has collected so much of money, and so has Exchanges done. Carry on, please.
Yeah, thanks so much. So Vikram is smiling. So, but nevertheless, so this was encouraging for us, and the way the changing the patterns have changed. Everybody used to look at long-term investments, say 1 year, 2 years down the line. Now, if you see at gold pre-COVID and post-COVID, the Indian prices from 42,000, it has gone as high as 48,000 per 10 grams. So this kind of returns in such a small time is never heard of. So now moving forward, this new millennials, they are getting used to such kind of volatility, such kind of opportunity, such kind of returns in this market. So when I would go forward and say now the entire logic of a long term and a short term has changed, because this kind of returns were actually unheard of. And even the large equity exchanges and the indices in India, if you look at the kind of movements and the volatility and the returns they have given from the lows to the highs, it has been tremendous. And hence, I personally think the entire liking not liking, but the prospect of looking at as investing in gold is changed. But I would also like to throw some light over here. We have BSE recently has launched the options on goods in gold mini contract, and we are doing reasonably well. In fact, fairly well. We completed the delivery cycle also. It is just 1 month of launch. So an options on goods is a very good product. It minimizes your risk, your cost on the commodity transaction tax, which is a huge cost here. So when you enter into a futures market, you pay an initial margin, you pay a mark to market, and you have to take care of so many things. So here in this case, you pay a small premium, and at the end of the expiry, you can avail physical delivery as well. So this again has become a very good option. We are doing sizable volume, almost about 20-25% market share in just 1 month, and we will make. And in fact, sir, we have issued guidelines for India Good Delivery also. So we started the discussion 2005. At last in 2020, when BIS issued the guidelines, BSE was the first exchange rather to follow those guidelines and issue guidelines on good delivery. So in the near future, you will see a Indian refinery which meets all the preferred guidelines can come forward and produce their delivery on the exchange as well. So this will be a win-win for an Indian investor in real term.
I congratulate World Gold Council, BSE, and MCX. You have really done tremendous work for the gold business in India. And I remember 20 years ago, LBMA came and they held a forum here, LBMA forum.
2004.
They came, they did it, they went away. And it was like everything in their hand. Now everything is in our hand in this business. So the things have changed totally now. I would like to call in Professor Dr. Saurabh Agarwal. He's a committee member of ASSOCHAM also, and at the same time, he is principal at IIF College of Commerce and Management Studies at Indian Institute of Finance. He has done his doctorate on a program called a goal programming portfolio section model. So portfolio section model programming, he has done his work of doctorate, and has been this has been done at the famous FMS at University of Delhi. Dr. Saurabh, I would like to know your views on the gold business in the current scenario, and you are an expert on portfolio programming. So what is your take on it?
Thank you, Sri Jindal-ji, for giving me the opportunity, and I also thank ASSOCHAM and also all the esteemed speakers. I have a small PowerPoint presentation. Maybe I'll take 5-7 minutes to show all the PPTs. As on the gold, I just plotted the gold chart, and I saw that it has already reached near its peak. Normally we tend to talk about some asset when it has already gone really high. I feel those listeners who are listening to this meeting, they must see what is the potential to rise in another. How do we see simple demand and supply? If the fear is going to increase, then gold is going to rise. If fear is not going to increase, then I don't think so. The gold is going to, rise, and that's the reason why I've always preferred. And my PhD thesis was also on equities. So, yeah, I've pressed. Are you able to see my screen?
Yes, we are able to see.
Hello.
Yes, doctor, we can see it.
You can see the okay, webinar is written there. Okay, thank you.
Yes.
So first PPT which it shows is practically when the IPO came, and I say not reference to any particular company, but when the IPO of Infosys came, nobody wanted to subscribe it. And practically, if you see, something like 10,000 rupee invested then would have become almost something like 2.5 crores today. So where nobody is looking at, I think that's where the perspective should be in terms of investment. Now, let us look at some companies which have been the biggest wealth creators. And I always say, when you are investing your hard-earned money, always look at those who have been good performance. We do it with employees, we do it with everything. And if you see, even in today's time, my last slide shows RIL. It has still been, and if you just look at their CAGR percentage, it is just 24%, 25. So that's the kind of returns equities has created. Why I prefer equities to gold, again, although the entire discussion is that equities help the corporate India. It puts the wealth in the hands of the people who are going to give jobs, who are going to work for the development of the nation. These are some of the companies. Now, if you want to go into fastest wealth creators, these are some of the companies which have multiplied. You can just see the price appreciation X times. And even in today's time, even post-COVID, if you see these companies, Britannia, every day you see 4 to 5% what you earn in fixed deposit. If somebody is tracking, you will see you can earn 4 to 5% in one day in a company like Britannia or Bajaj Finserv. These are strong, fundamentally strong companies. So what I recommend is during the post-COVID-19, while there are many philosophies, but value investment is the right thing to do, whether it is any asset class. What does value investment say? Value investment is saying try to find any undervalued asset. But our mind works in the opposite way. You know why our mind works opposite? Behavioral finance. Richard Thaler, who got the Nobel Prize, he says, if I eat an expensive medicine, I feel that it will cure me better. So that's the idea. Whenever we're investing, if we buy something which is expensive, however, to create value, you have to work the opposite way. For example, the Tatas, when they started in Chinchpokli buying a bankrupt firm. That's how the Mittal steel industry, they starting with bankrupt, buying bankrupt steel firms. So value investment, lots of research and patience is required. Money can't be made overnight. So first, anything you are going to buy, do you understand the business? Does it offer any competitive advantage? The management who is running it, can you trust it? And finally, does the price make sense? These are applicable to all the asset classes which have been discussed. Also look at the unbeatable moats. Why, Jindalji, when he started, he said Reliance has made money. The reason is it has got into an unbeatable moat. Today I'm using Geo fiber connection, which is there. Similarly, Coca-Cola, Gillette, people are going to shave. Identify unbeatable moats, those businesses which are going to survive and which are going to be needed. Such turbulent times are required. I also, some research was done by me, and we tested the hotel stocks, and what we saw was through that event study, on 11th of March, when the pandemic was declared, immediately the prices went down. Our Sensex went down about 22%, but after that it went up, and significant gains can be made. So practically, when everybody is rushing out, I think ASSOCHAM members and other esteemed players, that's the time to get into it. And everybody loses money. I can give the example in COVID. even Warren Buffett, whom I'm quoting, he has lost almost $50 billion. He has sold all his stake in US Airways, and it's a big amount for him also because his total cash reserves are about $130 billion. If you see, there is opportunity to make money. If you see, he invested this much, and he in Geico shares he made 1.3 million. So through value investment over time period, you can make a lot of money. Suzlon is another very good example, a case study. The company was doing good, but then it took a lot of debt. So debt, value investment says look at companies which have less debt. Okay, switching cost should be high. For example, if once I've taken a DTH, I'm not going to switch. These are some of the ways to identify unbeatable moats, how much intangible assets any organization has. So basically, the Buffett's philosophy is look at these 8 points. Does your investment have these 8 points? Then you should go ahead for it. Otherwise, not. There are many other filters that have been created. One is very popular, who was the guru of Warren Buffett, was Graham, and he said, look at earnings yield and the ratio of stockholders' equity. If the promoters of the company hold a large portion of the asset, then you should tend to invest in it. It should be the returns given by your equity should be twice of a AAA rated bond. Now, these are some of the rules and we applied it on Indian stock market. He said you do not hold it forever. Similarly, gold, if you keep on holding forever, you might lose out of the probability to earn return. He said keep it for 3 years to 5 years up to you earn 50% return. All the slides I've shared, so I'm not going to read this thing. What we did was we found, we did an empirical study on Indian markets in this COVID period, and we took just 5, these 5 parameters which were identified by Graham, and we found these are the companies which are common in all of them. And we saw Aarti Industries, one of the greatest wealth creators. There are other companies also, and this is the portfolio return table. With this, using these filters, in 1 year you could have earned this much, but if you hold it for 2 years, returns become negative. So actually, holding period sensitivity of results we saw. So actually, any asset class you buy, how much long you're going to hold on to it is also very important, which I think the investors and the participants should see. These are some of the results. We saw almost our model working in 8 out of 11 years, which is very good. There are certain tenure ratios which are there, which we also worked out, and we observed that yes, out of 6 years, even in terms of risk to return ratio, our portfolios did good. There are many other filters. For example, Scross is a very big scholar. He said that you should invest in companies which are available below the book value. All this data is available on websites like Money Control, ET Money. So, I mean, you can download the Excel sheet. All the listed stocks have little debt. Specifically post-COVID, debt is going to play a big role. And what Reliance has done, I think other companies are also doing through rights issue and other issues. I think that's a very important thing. He felt you should ignore services industry, and that way McDonald will never come into his filter. This Granblet filter I have seen works very well, and it's focused on two things: higher earnings yield. So if a company is doing very earnings yield are going to increase, and secondly, higher return on capital. And I can tell you one company is IPCA. November, December onwards, we started having news of virus spreading, and IPC exports a lot. And if somebody had invested, his wealth could have almost been doubled in such company. Not even leave that, return on capital. Another company I can give an example is Deepak Nitrite. If you look at the way they have grown and their earnings are growing. So we have to use these filters. Earning money in stock market or any other asset class requires a lot of research. And these are just examples. Just to give an idea, there is the NEFS filter which says take low PE stocks. Growth rate in EPS should be about 7 to 25%. So free cash flow should be there with the company. So these are some of the criteria. Lynch, he created identify slow goers. Those who will grow slowly, it is expected will fall down. So cyclical industries which are now going up, identify those. There are many others. Some say one should go in for family-run businesses, while Charlie Munger, who worked closely with Buffett, he said, no, family-run businesses, if there's family feud, it can drain out the business. There are many chart patterns also. I'm just showing you, if you plot it for gold, it will appear similarly. And what Charles Dow, who was the editor of Wall Street Journal, he said that one should look at when it is rising. This is known as upward rising trend. Enter any market here. If you enter here, you are going to make losses, and then it goes up. So these are some trends. If you enter at the top, there is something called a head and shoulder also. If you see this kind of pattern, you see market goes down. Normally, a lot of people, 99% of people end up losing well because they enter up here. Because once any asset class makes money, everybody starts talking about it, and that's the time when retail investors get into it and they lose money. So apart from this, there are many predictive stock technologies and charts like Bollinger Bands. They can actually predict, if it is here, it will go up to here. So always use that, to book your profits at the right time. There's a lot of empirical work going on. Journal of Finance is the mecca of finance, what we refer to in academics.
Saurabh, how much more time is required for this?
2 minutes. 2 more minutes.
2 minutes.
Okay. Yeah.
All right.
So they say that using these techniques, you could make money. Also, there are a lot of news coming in. For example, this news came, SBI and ITC actually increased after this news. MACD and other, you can apply these tools on commodities. There are many other schemes available, which you can see. Coming on to, in terms of mutual funds, I would like to attract your attention to debt mutual funds. The equity funds were giving 22%, 25%, but specifically post-COVID, this is the area where really returns are coming. If you are an institutional investor, then you can look at these SDLs, the state development loans. They are significantly giving 8.5%, which is also good. So debt funds, but they can also wind up. There is a risk involved in debt funds also. IPOs is good. IRCTC IPO, I must refer. You could end up making 150, 100, 200% return in IPOs. And see, news is there. If you read it regularly, this was the news. You should subscribe to it. And from 1,000 rupees, it went up to 1950 rupees. So this is RIL stock. So, final take, last minute, I like to spend. These are the different asset classes which was to be focused today. And I feel real estate can give you wealth, provided you buy the land. When you buy a builder flat, already a lot of profit has been shared. So you need to be very careful. Commodities are really doing good. In fact, recently we saw some commodities like cardamom are giving 300% return, but commodities market is not for trading. Equities market is for return. Gold is, of course, we're doing very good. Mutual fund, do not stop your SIPs. Derivatives only for the experienced ones. Hedge funds, of course, institutional buyers. Bitcoins, I'll recommend, although Supreme Court has lifted the ban, but I would recommend not to go in for, because government may come after your transactions. Artworks, only for the rich and wealthy. And finally, structured products. There are many structured products, but they have a particular objective, like differential voting right shares. So, if you are looking for that kind of scheme, then only. With this, sir, I would like to end my, small discussion and handing over to you. Thank you.
Thank you, Dr. Saurabh. It was quite a motivating presentation done by you and very comprehensive and easy to understand for a common investor. And now he can decide which line he would like to join in there, or he would like to try to invest there. And with this, friends, I would like to come to another area, another asset class, real estate. Real estate investments earlier were, we used to always say that invest in real estate, as you rightly said, Dr. K, invest in a plot, in a land, not in the building. And one can never go wrong. Even if you buy a little expensive, doesn't matter. 3 months down the line or 6 months down the line, you will find it is cheaper. And even if you have to shed some extra money. But today's scenario is, one needs to understand, and for that we have none better than Mr. Rajiv Talwar, CEO and whole-time director of DLF Limited, a wonderful person. I know him He has 35 years of experience, and I thought that I know him for 35 years.
Okay.
Former IAS officer, blue-eyed boy and blue-eyed friend of everybody. Always very helpful. Anybody who went to him, he always helped, and he will never tell his habit of helping people. You call him, he will say, Chuno, you hold the line, and he will call the person on the other line that there is such and such friend on this line. I want you to meet him, please. And that is the way he used to do. He will never say, I will talk and I'll come back to you. So this was his style always, and I believe it is still the same. He has been a banker also with State Bank of India. He worked in 76, and now he is whole time on real estate sector, and that also with DLF, the top corporate of the country. And I am seeing that he is doing lot of value addition to this corporate, and this corporate is growing and going day by day, going northwards. Rajiv ji, we would be very happy to know your perception about this particular asset class, and how do you see at it, how do you look at it, and how do you see the potential going forward
Thank you,
for our
Chuno.
investors?
I do confess that yes, it's been my pleasure to know him for about 4 decades. Not only him, but also former ASSOCHAM president, Mr. Anil Agrawal, the dearest of friends, the two of them are, and I have the privilege of knowing them for about 4 decades. It's my very proud privilege, but I'm actually thankful to him for this webinar today. Believe me, if I could keep quiet, I would love to do that, and that's why you'll find me speaking very little, because whether it was Mr. Soma Sundaram or Shivanshu or Professor Saurabh, I think this has been a great learning experience from me individually, and I'm sure it is equally useful to every person who is attending this webinar. Of course, we were, having been a bureaucrat, and I do know that we are quite responsible for hoping to keep real estate and gold in parallel. We also create a shortage of real estate and thereby see that the prices go up very high. Now that I've shifted to DLF, we try and do the other thing, that buy land when it is at a lower price, do a legacy pricing, and then add value to it, and hopefully leave plenty on the table for buyers. I think it's a very good asset class. It's one of the biggest investments that you can make in your lifetime. And everyone, I know of some friends, it's just a story that there's a very major law firm which does not take a case against us, only for the reason that when he bought land in Gurgaon to begin with, what he paid for 500 square yards, a few years ago, 1 square yard was equal to that. So with the result that even if in 20-25 years it's gone up 500 times, it's a fair return. And only as a matter of great, gratitude, he had given an unwritten command that no cases. He's given me plenty. But I think that also depends on the fact that yes, you have to choose. I personally feel that this is still a good buy, because prices for almost a decade have been languishing, or they've been constantly keeping well in relation to the inflation. Therefore, it's a good time to step in there, especially for young people. The government has come out with very many schemes for young people. I don't think artwork or gold or silver, the young are not really so much concerned with it. But I think to buy their first apartment or a second apartment, and especially for the millennial generation, which is a very highly mobile generation, the lure of gold, the lure of commodities, the lure of financial instruments can never be lessened. I think that's something which accounts for a huge market. And heaven, be kind to us, that thanks to all of you, you've created such wonderful avenues of investment that whenever the amounts are small and manageable, to whatever best extent they can do, they should invest in whatever you are recommending, because that's really what makes the economy tick and grow, whether it is shares, whether it's mutual funds, or any kind of instrument, or even commodities and bullion, of course. But I would really recommend for the young who are coming into the market that there should be a paradigm change. Real estate has not really been in the most favorable light over the past decade because of the experience which people have had, and that I think is due to over leveraging and perhaps excessive risk taking by developers. So many are getting sifted out, and there will be a huge change in the entire scenario. But for smaller housing, whether it is 300 square feet, whether 600 or 1,000 or 2 to 4,000, even larger ones, depending on the appetite and the investable surplus, it is still a great investment opportunity. And I would really recommend it for women. First of all, the kind of security that gets in, and if we've seen the pandemic, everyone has seen the migrant population and hordes of migrants. You've seen the kind of human issue that was raised. You are all dealing with it. Have you ever seen anyone who has a home, even a good, stable, rented home, leaving? That is how your services continued. And I think there is a huge potential lying for two things in future, which will come about. One will be housing, and therefore growth of business, commercial and retail over the years. Number two will be something which we really haven't seen very much, which is rental housing. All of you know what Oyo did to hotel rooms. It's time that India actually planned to make about 4 to 5 crore different sizes, because demand will be in different sizes, homes all over, and get into the rental mode. We've been saying it for about 2 years, and we're very happy that the Prime Minister has announced this policy last week. There will be many coming in, and I'm sure with your brains, there will be a new asset class which will be generated, which will be rental housing, which becomes like a paper commodity. It's what finance paper does and what financial holdings do. And there have been some very innovative things like digital gold, which was which was being talked about. Similarly, there will be a concept of rental housing which will come up all over the country. And we have a very small portion of rental housing in this nation today. That is a big growing factor. And I would really recommend that anyone, if bank rates are going down and interest rates are going down, then it's a very good asset class to partake in, especially for the young. And of course, old have to do it because they have to provide for their old age benefit. And maybe if the government can actually make that just one simple change, which is what is given as a maintenance allowance per annum, which is 30% right now, if it is raised to 50, either for women or for senior citizens, I think that will provide a very good avenue for investment. But I would really love to hear all of you, because I'm quite certain that there should be a paradigm change. That earlier we were talking about, there should be sales of homes after they are completed, so that there is no question of cheating anyone. There is no hard or sad experience that any buyer will have. But with these times and the pandemic, I'm sure launches will get much more frequent. If rates come down of interest, then this is again a very good buy right now. But of course, who can compete with the sentimental security which gold provides, which financial instruments provide? So I'm sure we are all in a competing paradigm, and may competition bring the best, whether it is commodities or whether it is gold or whether it is financial instruments and the big stock exchanges, because that is where wealth really grows well, and they're very well regulated in India for the moment. But the government has introduced RERA, which is the Real Estate Regulation Act, and hopefully there will be no major cases at all in the near future or in the long term for people being cheated of their money. And therefore, buying property wherever you don't have any, and especially for the young who can change jobs from city to city, but owning one is a must. Especially, I think the class of people you are, where it is very often a stigma if families don't last. A nuclear family doesn't last, and a girl has to say that I want to get back home. I think the new trend should be that ladies and girls should own homes, and if there is ever a breakup, the man must be told to move out. She must get her security and emotional security and financial security as a permanent feature. So I do think that real estate, like gold, will be the long-lasting asset. But with the market going deeper and deeper into the stocks, I think that's a very good thing for India, and we should all be proud of the people, including Dhirubhai, who actually began the middle class investment revolution in this country, and all of you are partakers of that. So I would rather listen to you and get some knowledge from you for my personal thing, but I wish my family could also be asked to hear. I'm sure they would turn out to be wiser, but I'll try to get a recording of this entire webinar to show it to everyone. It's that good a webinar. Thank you, Chunu. It's been really great being here. Thank you so much.
Thank you very much. But if your family would have been here, finally you would have been buying some gold this evening.
I swear. Yes, you're correct.
No, I have two small clarifications. Real estate development is a nation building thing. What is one great wish you have from the government? If they give it to this industry, then this industry can prosper very well and grow very well. Is there anything to do with taxation of the thing, or dealing with real estate, selling and buying procedure should be simplified? What is that one thing? And second thing, when you say investment allowance should be made 30 to 50%, does this mean the building value, or it is including the land value?
No, it's not an investment allowance. It's the maintenance allowance for rental housing.
Maintenance allowance. Yes.
That is normally 30% of your annual rent. I think if that is increased, from 1 or 2%, your return on that will go to 4 to 6%, and that will be a great incentive. And that one great want or desire which I have is that I think last year they had reduced GST to something like 5 for 1% for affordable housing is perfect, because that is without tax credit. But 5% all other and not being given to without input tax credit, I think is not a very wise thing for nation building. I think we introduced GST for the sake of a tax trail. So therefore, the older system which was there, for whether it is residential, retail, or commercial, including properties which are leased out, there should be a 12% GST with 1/3 abatement for land value and with input tax credit. I think it's very essential. If we have to see revenues of the nation rise, then it must actually be that we should be collecting about maybe 20 lakh to 30 lakh crores on GST alone. It's reached about 1 lakh crores per month, but I think it is undoubtedly something which should reach about 2.5 lakh crores per month, and it must go up, because we must achieve something like $500 billion worth of revenue, and that should be a huge ask for the people. Therefore, I really feel that GST is a very major game changer. It's the best reform that has come about in this country since independence, and we need to have a hard look at it so that the tax trail is never lost.
Great. Thank you very much for sharing your wisdom with us and our investor friends, and we really appreciate that you could spare this time for us. And now, friends, I would like to come to another asset class called mutual fund investments, which is also very, very popular. And we normally say म्यूचुअल फंड इन्वेस्टमेंट सही है? कितना सही है? I would like to know from Mr. Vikram. Mr. Vikram Dhawan, he is a fund manager at Nippon India Mutual Fund. He has 2 decades experience with him and for managing funds, etc., and risk management and investing in corporate and banking sectors in India. So, Mr. Vikram Dhawan, would you be so kind to share your perception with our investor friends on mutual funds investments and how pre-COVID and post-COVID, what kind of difference you see there? What kind of changes are required? What kind of balancing is required?
Okay. Thank you very much for the kind introduction, sir. And thank you all the speakers. It's been amazing hearing all of you. I think mutual funds and the exchanges perform a very important role in the economy. You know, they are the conduit which, you know, disperse the surplus money or the surplus savings lying with the small investors into very productive, you know, avenues like equities or bonds, which are again used by the promoters or the government to grow the economy, to build the economy, to create infrastructure, etc. We and the exchanges play a very important role in being that conduit. Now, I think the most important aspect of investing is that, you know, you should be aware what kind of investor you are. You know, if, as they say, if you don't know where you're going, you might end up anywhere. So, most importantly, before you look at anything, whether it is mutual fund or whether it is PMS or whether it is broking or whatever, it's very important to, you know, analyze yourself, what kind of investor you are, what are your expectations from the investment, from mutual funds or whatever, wherever you are investing. So you know, you can basically divide investors into 3 categories: the tactical investor, the speculator, as we call it. I mean, they are looked down upon, but poor guys, they are the ones who provide liquidity in the exchanges. Then you have the you know, the people who are asset class agnostic, purely, you know, focused on absolute returns. So they'll invest into anything that moves. You know, for them, gold, equity, or bonds are same as long as they are fulfilling their investment objectives. Then there is a third class of investor, which believes in asset allocation, which believes in portfolio diversification. Now, this third class has become more relevant after, you know, the 2000. The more crises we have seen, the more value of asset allocation people have seen. Now, since you know, the forum is more about gold, so I will just give it a gold angle. I don't want to take too much time. It's already 4:45 in the evening. Maybe I'll spend a few minutes how people should look at gold and why they should look at gold in the portfolio. But coming from a mutual fund point of perspective, there's one thing which I would like to tell, that most of you would be confused that whilst the economy appears to be doing not pretty good, but then you have the stock markets across the world which are going up. So I think first of all, as an investor, you need to understand that the economy and the stock markets are not always the same thing. Now, I'll give you an example. In a village, in a village that may be poor, but you could still have 2 people doing extremely well. Similarly, in a country which may not be doing extremely well, you could still have a bunch of people who are doing extremely well, and you may want to invest in their business. So this is what our job is, to find these gems amongst the whole, you know, as they say, to separate the wheat from chaff. But I think I would not like to go into the other aspect, but I would like to summarize it in this way, that today the markets are controlled by central banks. We are no longer a market which is a classical market. There are no textbooks to explain what's happening in the market right now. It's the central banks. You know, there are central banks in Japan who are even buying equities. The US central bank has started buying bonds. Even our own central bank, Reserve Bank, has provided so much of liquidity. So we are living in very, very different times. And, you know, any rule book, any textbook, unfortunately, may not help to ascertain what may happen in the future. And that is where gold has become extremely important. And I'll throw a very interesting statistics at you, that whether it was 2001 or 2008 or 2020, there were two trends which were exactly similar. In 2001, gold bottomed out few months before Dow Jones or equities, and then rallied for 6 years, close to 240%. I beg your pardon, Som sir and Jindal sir, because you guys are much more capable in gold than me, if I get it a bit wrong. Similarly, in 2008, similar thing happened. Gold bottomed out few months before Dow Jones went on a almost a 3-year bull run, 170 odd percent. Similarly, if you look at the month of March in 2020, again gold bottomed out a good week and 10 days before Dow Jones bottomed out, and since then there's been a race between the two, 20 odd percent from there. So why this has happened is very important to understand. First of all, why people have become focused on gold. I'll take you 20 years back. 20 years back, when the Asian currency crisis happened, when the so-called tiger economies of Asia, like Thailand, Malaysia, Indonesia, etc., they ran out of dollars, they ran out of foreign exchange, and they had to default on their obligation. At that time, in the late 90s, the thinking was that dump gold and buy dollars. So for a very long time, the central banks across the world, the investors across the world were dumping gold and buying dollars. And that is why if you see that era of mid-90s to late 90s to early 2000, you'll see that gold has done extremely badly. We saw the gold bottom in 2000s. In fact, there's a very interesting story in a very lighter way. I like to take some liberty in use of words, that the bottom of the gold was made when the UK Treasury decided to dump a lot of their gold. And at that time, they dumped the gold at all-time low of 300 or 300 odd dollars per ounce. Considering today we are at 1800, and the person who was responsible for doing that was the then Prime Minister of UK, Gordon Brown, and which is now affectionately called as the brown bottom of gold. So since then, what people saw in 2001 and 2008 and 2020, what you're seeing, that the sanctity of dollar cannot be taken for granted. When the problem will come, the Federal Reserve will print money. I mean, the money printed in 2001 and 2008 has still not been reined in. I mean, you must have heard about this term called taper tantrum, when the Federal Reserve of USA wanted to recall the stimulus in 2011 and 2015. I mean, we leave aside the world. I mean, the Nifty and Rupee went for a huge toss at that point of time. So, unfortunately, and today we are looking at 10 trillion moving towards $12 trillion of stimulus. So, there's a very good possibility after the next boom, when the next bust comes, we would have not paid for the 2001, 2008, and 2020, crisis. So the world, unfortunately, the world has found the cure for debt, and it is more debt. So we are becoming more indebted, and the central banks, the government across the world will be forced to keep the interest rate lows, to keep the cost of debt servicing. And whenever the interest rates are low, the opportunity cost of holding gold becomes almost nil, because gold doesn't pay you any dividend.
Vikramji, you are dealing with so many investors all the time. You have dealt with so many investors all through your life. I want to know your idea of investing. Suppose you have 100 rupees investable surplus. Now, after this pandemic, where will you put this money in today's world, in today's ecosystem?
So I think it's very important to understand asset allocation. Not all asset classes will run together. There'll be an equity bull run. It may not be accompanied by a gold or a bond bull run. You will have to do asset allocation. Now, obviously, you have to understand which part of the cycle is. There are various factors. If you are in a deflationary cycle, it's a time to invest more in debt.
Vikramji, I want to know where you will put your 100 rupees.
Okay, so first of all, as mutual fund employees, we are not allowed to give direct advice to the investors. So please don't do whatever I'm saying. Don't do it tomorrow. But I think as of now, I would go by what Som mentioned in terms of gold allocation, 10 to 15%. I would also go for out of that 100 rupees, 10 to 15 rupees will be gold, and rest 85% will be split between debt and equity. Now, it all depends upon what is your risk appetite. If you are somebody who has a high risk appetite, then you should be having higher equity allocation, maybe 50% allocation in equity and maybe 35 in debt, or 60 or 25. If you are having a low risk appetite, then it should be maybe 20, 30 in equity and rest in debt. But sir, I like to add one more thing, which is very important to the discussion. It is not as simple as how much money we will put in what. Most important thing is when to sell, when to switch. That is more important, because we are not living in a static world. It is not that today you can create a perfect portfolio. There is no perfect portfolio. Today, even if I put, let us say I put 50 rupees in equity and 20 in debt and 30 in gold, I have to review it every quarter. I have to review it every year, because things will change. If the inflation is going up, I need more gold and equities. If there's a deflationary environment, I need more debt, less equity, and less gold. So I think it is a moving target. Your question, the answer would be a moving target, and I would have a different answer 3 to 6 months down the line. So it's very important to understand where each asset class is in terms of price points, in terms of its cycle, and then make an investment into it.
Mr. Vadva, I would like to bring you in at this time. Tell me, please, Mr. Vadva is Managing Director of SKI Capital and he is my colleague at ASSOCHAM. He is handling investment and capital market committee of ASSOCHAM. I would like to know your perception about investors. What would you like to say, and what kind of wisdom you would like to share with them in today's post-COVID scenario? Where should they put their money? Where should they invest their money in?
Thank you, Jindal, and thank you. And I compliment ASSOCHAM for coming up with the topics and doing webinars regularly. Generally, as I have listened, and it was a pleasure listening to experts on various asset classes. I can say that we all know that no asset class can be defined as a right or wrong to invest. It's all based on the investor's objective and needs and preferences. Pros and cons of each asset class needs to be investigated before investing. As far as you have asked the question to every panelist, how much you will invest, I am coming from equity market, which is a riskier asset, and it's a old wisdom that you deduct 100 your age from the 100, that should go to the riskier class. Suppose I am 55, so 45% of my total wealth allocation should be towards riskier asset. This is an old wisdom. And as far as COVID is concerned, we all know it's an unprecedented time. With the uncertainty in the world, it will be natural for investors to do some reallocation, as our topic suggests. The rational expectation will be that it might they might rebalance from physical asset to financial asset, more so towards equity. As my BSc Mr. Samir Patil has said, just mentioned, in last 3 months we have seen 14 lakh accounts being opened in the equity market, which is a record of itself. Because all along we have been saying that we are a country of 130 crore, but still we have 2.5 crore demat accounts. And normally in any developing country, this figure is not less than 15%. But what we have seen in last 3 months, we can say that we can cope up with the other developing worlds also. As far as every expert has mentioned and taken a subject of respective class, I'll just mention one part of gold which we have missed. This is sovereign gold bonds being offered by the government, which carries interest of 2.5%. And I assume that many of our listeners and audience today are first-time investor. So if one has to go for gold, this is a good option one should look at. Traditionally, gold is considered as an important and a must investment in India. And India continues to be the major and the biggest consumer of gold, especially in the uncertain world when all central banks are printing currency. One can look at gold as a valid investment. As Mr. Rajiv Talwarji, and we did one program for PhD also. Mr. Talwar, if you remember, in when you were president of PhD, we did same topic. The COVID was not there. Then we were discussing that, you know, in India, especially North India, people have created their wealth from real estate. I confess that my most of the wealth, although my younger generation, my children say that it is skewed towards real estate, but we have created our wealth through real estate. So one must not miss this real estate, which has been languishing for last 10 years. And as he has rightly pointed out, that for a younger one, once you have your own house, you can concentrate on other wealth and other asset classes. So one must first of all, look at real estate, or, you know, investing in his or her own house. This is my submission. And other part, like there are other revenue also in real estate, like we have REIT, which is again an instrumentalization of the real estate asset. Although we don't have much of the offering in REIT, but going forward, as government is quite serious about REIT and InvIT, this again is going to be another asset class of its own. So one can look at REIT and InvIT also in subcategory of a real estate. As far as this mutual fund, as Mr. Vikram Dhawan has said, I assume many of our audience are first-time investors. So equity is a riskier class. If one has to invest in equity class and it's just beginning to enter in the market, best way to do it is through mutual fund only. So I'll just suggest that first-time investor should take a route of mutual fund, and there are very good investment fund managers down there who can manage your money. So these are the major asset classes, but we have to see that, you know, these asset classes, there are certain factors which one has to look at. One is the risk appetite of a person. There are people who are just risk averse, so equity is not for them. Equity, especially for a long-term investment goal, equity is the right asset. As you have also asked some panelists, which asset class has given the best return. So it is equity which has given over a period of time best return. In last 10 years, equity has given you a return of 15 to 16%. Whereas in gold, it has given you a return of 8.8 to 9%. So over a longer term, equity is definitely a very good investment asset class. Risk appetite has to be seen. As one of my few days back, I was listening to CNBC. They were saying that there are new investors, but they are all punting. So all the sports punters are in the equity market. They are punting in the market. So, but this, if volatility is your game, then equity for a short term is a good class, and you can get the excitement. But for a longer and serious money to be made in the markets or in various asset classes, I would recommend equity through direct investment or through mutual fund, but equity is the best investment. Jindal ji.
Thank you, Narendra ji. Thank you for sharing your wisdom with us. Now I would like to invite in Mr. Naveen Mathur. He is Director, Commodities and Currencies, Anand Rathi Shares and Stock Brokers Limited, with 25 years of great experience in financial markets, dealing with cross-section of the investors, all the products. Naveen ji, I would like to know your perspective on how to take and how are you dealing with these new investors currently during the COVID period and after nowadays. So can we hear from you, your perception on the subject?
Thank you very much, Jindalji, and thank you, ASSOCHAM. It's been pleasure here, listening to all the speakers for the last 1.5 hours or so. We are just on the finishing stages of this particular webinar. I won't take much of a time. I have heard the learned people, Mr. Somasundaram, yourself, Vikramji, and Mr. Rajiv Talwar, including Mr. Narendra, Samir, and Shivanshu from the exchanges. This new, which I would have to say, a short perspective definitely is what we are seeing. A change in the trend from the last couple of, I would say, years is that the people are moving from the traditional model of investing to a kind of an innovative model of investing. There are risk takers as per the profile of the people, and there are people who don't want to take too much of a risk, and they are risk averse people, asset classes which people would like to be invested with. As Vikram has rightly pointed out, it depends on the scenario. We have seen 2012, 2008 when the gold touched the lows to a $19, $20 levels too. Again, from a stagnant of 80, say around $1,200, we have seen prices moving up to an extent of $1,800+ too. So I think it largely is based upon the scenario where you are, and basis that particular scenario, you should be wise enough to invest your corpus, invest disposable incomes, invest surplus income of whatever you have. To judicially to the different asset classes. If you really ask me, the value investing, as Saurabh rightly said, is one of the good things to look out for in case of the equity markets. Everybody would not do pretty well. All the equity stocks would not do pretty well. You should be very confident enough on a certain sector, on a certain stocks, which is value investing, a blue chip out of the particular sector to be invested with. Everybody would not do well. Means all the sectors would languish, I feel, for quite some time now, and particularly the hospitality industry would languish. But education sector, the pharma sector is pretty good to be invested with, and that too, a gem. Particular sector would do well for you. I've been in commodities and currencies for last 14-15 years, thick and thin on that. Everybody has talking about gold, and I think gold is not to be seen as an asset class for the downtime. I think it is an asset class for the better risk-adjusted return, as Som said in the initial remarks of the presentation. So I think the debt, the gold, and the equity mutual funds or the equity direct asset investments would be great, subject to that you know what you are doing and you know what your profile is, what your risk appetite is, as Vadvaji rightly said. So I won't take much of time there. I'm the last speaker in the entire conversation. People have spoken their wisdoms. With that particular note, I thank you for inviting me on this particular platform. Thanks a lot.
Naveenji, you may not be last, but you are always with us, and we are thankful to you that you, whenever we request you, you never say no to us. As a final word, I would like you to reply some questions. All the panelists, I would request, I read the questions from the audience one by one, and if you could kindly reply. First question is, want to know best investment option in COVID-19 situation, that is mutual fund, PPF, or bonds? Who would like to take this question, please?
Health is a better option.
Professor, sorry?
During COVID, you said, so I said health is a better option, neither stocks nor gold nor anything.
And at what price one should be looking at buying it?
Invaluable, I should say.
Thank you. Professor, you wanted to say something?
Yes, so it depends upon your wealth level. If your wealth level is low, I would recommend particularly in real estate, in PPF kind of fixed interest earning monthly MIS. If your wealth level is significantly growing up and it is at a comfortable level, then you should invest extensively in equities and debt funds. So practically where you stand in the wealth continuum, you need to take a call.
Thank you.
I'd
Next
like to
question is
add one thing. Sir, I'd like to add over
yes,
here.
Mr. Vikram. Yes, Mr.
Thank
Vikram.
you, sir. I think it's not just the economic crisis, it is the uncertainty which is plaguing the market. So you may want to look at, if you're looking towards mutual fund, you may want to look at diversified fund. And anyway, you should have a diversified portfolio because we don't know how the world will look like 6 months, 1 year down the line.
Vikramji, if somebody asks me, I will say mutual fund because I am using them for last 30 years and I'm happy with it.
That's very nice to hear, sir. Thank you very much for your kind comments.
1990, I started using mutual fund route.
Wow.
Next question. Future of equity, shares and mutual fund. Which investment is better at this juncture? Equity, shares and mutual fund. So similar one. Can we say mutual fund? All the panelists.
I think, sir, if you are able to actively follow the market on day-to-day basis, then maybe you can go for direct equity. But if you are busy in your life and your work, you don't have time, then I think, and you cannot, give time and resources to it. So it's better to leave it to the mutual fund. And that's how I think you should look at it. That's my personal view. Thank you.
Next question is for Dr. Rajiv Talwar. What are the barometers of prediction of normal earner to choose real estate to buy home, keeping aside his monthly expenditure, how much he should start investing and in which?
So
Shall I say it again?
No, perfectly okay, Sam. I think the best scheme is it's a very major investment. If you have anything like 5 or 10 lakhs to invest, please buy a home worth 50 lakhs or anything below that, because banks give you a large amount of loan at a concessional rate, and also because the government of India has provided a scheme whereby you almost get that 2.5 lakhs, which is an annual EMI. EMIs, 12 EMIs put together are tax exempted, and therefore in about 20 years time a 50 lakh home will almost come to you with tax exemptions free of cost, with just 10 lakhs of rupees.
Rajiv ji, gold and real estate both come from the earth. Which one first? बड़े लोग कह के गए हैं कि पहले घर होना चाहिए, उसके बाद गोल्ड होना चाहिए. घर होगा तो आप बचे रहेंगे और उसके बाद अगर कुछ है तो फिर गोल्ड भी ले सकते हैं. तो बड़े लोगों को तो हमेशा पसंद है घर अपना होना चाहिए.
मैं आपको भी बड़ा मानता हूं और नरेंद्र जी को भी बड़ा मानता हूं. उन्होंने पहले, दोनों ने आपने कहा है कि पहले घर लो, उसके बाद सोना भी आ ही जाएगा. सोना भी और चांदी भी आ जाएगी.
घर से जो खुशी घर से मिलती है किसी और चीज से नहीं मिलती.
Actually, financial and emotional security comes from there, sir.
And happiness also. If you don't have your own house to stay, कहीं दिमाग में वो घुसा रहता है कि हम रेंटल उसमें बहुत टेम्परेरी काम में चल रहे हैं. और अगर आपने कोई प्रॉपर्टी ले ली है तो एक स्टेबिलिटी आ जाती है लाइफ में. 50% of your life gets covered by that.
Correct. And then you can change your town, go to another place and stay in a rented house. There's no problem. You can change your jobs, you can go to rented homes, but एक घर जरूर होना चाहिए जिसको अपना कह सको, जितना भी छोटा हो.
और इंडिया के कॉन्टेक्स्ट में बिल्कुल ठीक है ये.
Thank you.
Next question is Mr. Samir, for you especially. Can we also know what opportunities beyond gold? Beyond gold भी दुनिया है कि नहीं?
Yes, sir. There are a lot of opportunities. In fact, for the investors. In fact, before going to other opportunities, I would like to thank Vadvaji also, because I missed out on the sovereign gold bond, and what an opportunity! It's and Vadvaji, thank you so much for covering that.
Where is this coming from? Okay, not an issue. Achha, now for final word, if somebody wants to say something, otherwise I would like to call it a day, because I'm already running a little bit out of time. So any final word if you want to add.
Jindalji, 2 minutes. I would like to thank you for the session and inviting us, VSC, to be a part of this panel. In
My
fact, the entire
pleasure.
panelists, I really enjoyed. It was nostalgic speaking, listening to all of you. And Vikram took me 20 years down the line. He spoke about central bank selling gold, and I remember those days because Bank of England through the CBGA selling gold in tons, and gold making a low of almost $250 per troy ounce. And I still carry that cutting with me from Economic Times, where there was an article saying gold might come down to $100 per troy ounce as well. And that is the day today, and we are at $1,900 per troy. Vikram is smiling like anything. So, and he very articulately touched on those points: 2001, 2008 subprime, and then 2015. I mean, it was nostalgic. He took me down the memory lane. So thank you so much for that.
Anybody else want to say something, or we call it a day? All right.
So one thing,
Yes.
so one thing I like to say that the commodity asset class has been given a stepmotherly treatment or a stepfatherly treatment. So it's very excellent on your part to host such grand seminars on commodities and real estate. Obviously, everybody knows about it. So yeah, I mean, from the community of commodities, I would like to thank ASSOCHAM and you for having such a grand, especially at this time. Thank you very much for that. So thanks for inviting.
Vikram, we did our first conference on commodities in 1995 at ASSOCHAM.
Wow.
When there was no exchange, no online this thing, we started at ASSOCHAM 1995. We did first conference. So ASSOCHAM is fully committed to all these things, and we did gold 2002, first one, and others also. So ASSOCHAM has been doing great job on all these subjects of interest to the trade and industry, and I appreciate and I thank you, each one of you personally, for sparing this time for ASSOCHAM. Thanks a lot, and thanks to our audience who has been with us all this time. Thank you.
Thank you.
Bye.
Thank you.
Thank you.